Hello friends. Friends, let's start today's discussion. We are discussing section 9 and the circulars pertaining to section 9. Let me share the screen first. Yes. So, yesterday we have completed up till 51 of 2018, dated 31st July 2018. Now we'll start with 52 of 2018, which is 9th of August 2018. Clarification regarding applicability of GST rates on various goods and services. So let's see what clarification are there. Is there on your screen on 9th of August 2018, circular number 52. Representations have been received seeking clarification in respect of applicable GST rates on the following items: fortified toned milk, refined wheat and cane sugar, tamarind kernel powder, drinking water, plasma products, wipes using spunless non-woven fabric, real jari kasab, marine engine, quilt and comforter, first body building as supply of motor vehicle or job work, and disc brake pad. So the clarifications pertaining to these products is given in this particular circular. The first is applicability of GST on fortified toned milk. Representations have been received seeking clarification regarding applicability of GST on fortified toned milk. Milk is classified under heading 0401 and as per serial number 25 of the instruction number 2/2017, dated so and so, fresh milk and pasteurized milk, including separated milk, milk and cream, not concentrated nor containing added sugar or other sweetening matter, excluding ultra high temperature milk falling under heading 0401 attracts nil rate of GST. So it says जो fresh milk है, pasteurized milk है, जो separated milk and cream not concentrated, not containing any added sugar, ये सब 0401 में fall करता है and the rate is nil rate. Further, as per the HSN explanatory notes, milk enriched with vitamins, as per the explanatory notes, milk enriched with vitamins and minerals is classifiable under HSN code 0401. Thus, it is clarified that toned milk fortified with vitamins A and D attracts nil rate of GST under HSN 0401. Then, applicable GST rate on refined wheat and cane sugar. Doubts have been raised regarding GST rate applicable on refined wheat and cane sugar. Right, serial number 91 of Schedule 1 of notification number 1 of 2017, dated so and so. 5% GST rate has been prescribed on all kind of beets and cane sugar falling under heading 1701. Doubts seem to have arisen in view of serial number 32A of the Schedule 2 of the notification 1 of 2017, dated so and so, which prescribes 12% GST rate on all goods falling under tariff items 170191 and 170199, including refined sugar containing added flavoring or coloring material, sugar cubes other than those which attract 5% or nil GST. So the doubt has arisen because of this, that what will be the rate which will be applicable to refined wheat and cane sugar, whether 5% or 12%. Therefore, it is clarified that by virtue of a specific exclusion in serial number 32A, any sugar that falls under 5% category at serial number 91 of Schedule 1 of 1 of 2017 gets excluded from serial number 32A of Schedule 2. So anything that is falling within Item number serial number 5091 is 5%. As all kinds of beet and sugarcane falling under heading 1701 are covered by said entry serial number 91 of schedule 1. Those would get excluded from serial number 32A of schedule 2 and thus would attract 5%. So therefore, it is now clarified that 5% will be the rate which will be applicable to beet and cane sugar. Accordingly, it is clarified that beet and cane sugar, including refined beet and cane sugar, will fall under heading 1701 and attract 5% GST rate. Next is applicable GST rate on treated modified tamarind kernel powder and plain unmodified tamarind kernel powder. Representations have been received seeking clarification regarding GST rate applicable on treated modified tamarind kernel powder and plain, which is unmodified tamarind kernel powder. There are two grades of TKF: plain modified form, hot water soluble, and chemically treated modified form, cold water soluble. So दो तरीके के tamarind kernel powder हैं. As per serial number 76A of schedule 1 of notification 1 of 2017, 5% GST rate was prescribed on tamarind kernel powder falling under chapter 13. However, certain doubts have been expressed regarding GST rate on tamarind kernel powder, as the said notification does not specifically mention the word modified, as both plain, which is unmodified tamarind kernel powder, and treated, which is modified tamarind kernel powder, fall under chapter 13. It is hereby clarified that both will attract 5% of GST in terms of the notification. So दोनों को ही rate 5% ही लगेगा. Next, applicability of GST on supply of safe drinking water for public purpose. So I hope friends we all are aware, जहाँ पे भी ड्रिंकिंग वाटर की सप्लाई रहती है दैट इज एब्सोल्युटली नॉन टैक्सेबल, इट इज हैविंग निल रेट ऑफ ड्यूटी, बट स्टिल देयर इज सम कंफ्यूजन. जैसे आप मिनरल वाटर रहते हैं, इफ मिनरल वाटर इज देयर व्हिच इज देयर प्रोवाइडेड इन टैप, लेकिन यू कैन open the tap, fill the mug and then drink it, and then there is it's a packaged one. So there are two different classifications for the same. So representations have been received seeking clarification regarding applicability of GST on supply of safe drinking water for public purpose. It says attention is drawn to entry at serial number 99 of notification 2/27 2017, by virtue of which water other than aerated, mineral, purified, distilled, medicinal, ionic, battery, demineralized, and water sold in sealed container falling under HSN 2201 attracts nil rate of duty. So normal water, if it is being supplied, which is not aerated, which is not mineral, which is not purified, which is not there in the sealed container, it will attract nil rate of duty. Accordingly, supply of water other than those excluded from serial number 99 of notification 2 of 2017 would attract at nil rate. So those will be included that will attract nil rate. Therefore, it is clarified that supply of drinking water for public purpose, if it is not supplied in a sealed container, it is exempt from GST. Next, GST rate on human blood plasma. References have been received about varying practices being followed in different parts of the country regarding the GST rate on human blood plasma. Plasma is the clear, straw-colored liquid portion of blood that remains after red blood cells, white blood cells, platelets, and other cellular components have been removed. As per the explanatory notes to the HSN, plasma would fall under the description antisera and other blood fractions, whether or not modified or obtained by means of biotechnological processes, and would fall under HSN 3002. So this is what they are explaining, that what is plasma, and then comes the clarification. Normal human plasma is specifically mentioned at serial number 186 of list 1. Under serial number 180 of schedule 1, of the notification 1 of 2017 and attracts 5%. This is normal human plasma. Other items falling under HSN 3002, including plasma products, would attract 12% GST at serial number 61 of Schedule 2 of the said notification, not specifically covered in said list 1. So whatever is not covered in list 1, that will be covered in list 2 and the rate will be 12%. Thus, a harmonious reading of two entries would mean that normal human plasma would attract 5%, whereas plasma products, so normal human plasma रहेगा, so that is 5%, but the human plasma products would attract 12% GST rate if otherwise not specifically covered under the set list. Then appropriate classification of baby wipes, facial tissues, and other similar products. Varied practices are being followed regarding the classification of baby wipes, facial tissues, and other similar products, and references have been received requesting for correct classification of these products. As per the references, these products are currently being classified under different HSN codes 3307, 3401, 5603 by the industry. So these are the classification which is being followed by the industry. Now commercially, wipes are categorized into two types such as baby wipes, facial wipes, disinfectant wipes, makeup remover wipes. So these are the categories of wipes. These products are generally made by using non-woven fabrics of viscose and polyviscose blend and are sprinkled with demineralized water and various chemicals and fragrances, which impart the essential character of the product. The base raw material are moisturized and cleansing agents, preservatives, aqua base, cooling agents, perfumes, etc. The textile material is present at a carrying medium of these cleaning and wiping components. Now, what they are clarifying and classifying is now in the next para. According to the general rule of interpretation of the first schedule to the Customs Tariff Act, mixtures, composite goods consisting of different materials or made up of different components, and goods put up in set for retail sale, which cannot be classified by reference to 3 small a, that is 3 clause a, shall be classified as if they consisted of the material or component which gives them their essential character, insofar as this criterion is applicable. So whatever will give essential, this is a settled principle and the rule of interpretation that अगर बहुत सारे multiple products हैं या multiple चीजें हैं, so जो essential character देता है raw material या material, that will become the important thing for taking into consideration the tariff. Since primary function of the article should be taken into consideration while deciding the classification, it is clear that the essential character of the wipes in the instant case is imparted by the components which are to be mixed with the textile material. As per the explanatory notes to the HSN code 5603 clearly excludes non-woven, impregnated, coated, or covered with substances or preparations such as perfumes or cosmetics, soaps or detergents, polishes, creams, or similar preparations. So this is basically excluded from 5603. What is the HSN? It is reproduced as under. The heading also excludes non-woven, impregnated, coated or covered with substances or preparations, that is perfumes or cosmetics, soaps or detergents, polishes, creams or similar preparations, fabric softeners, where the textile material is presently merely as a carrying medium. Further, HS 3307 covers wadding, felt and non-woven, impregnated, coated or covered with perfumes and or cosmetics. The HSN code 3401 would cover paper, wadding, felt and non-woven, impregnated, coated or covered with soap or detergent, whether or not perfume. So this is what is being excluded. So therefore, as per the explanatory notes to the HSN 3308-07 includes wedding, felt and non-woven, impregnated, coated or covered with perfume or cosmetics. Similarly, as per explanatory notes to the HSN, the heading 3401 includes wipes made of paper. So 3401 mein wipes which are made of paper, wedding, felt and non-woven, impregnated, coated or covered with soap or detergent, whether or not perfumed or put out for a retail sale. Thus, the wipes of various kinds, as stated above, are classifiable under the heading 3307 or 3401, depending on the constituents as discussed above. Therefore, if the baby wipes are impregnated with perfumes or cosmetics, then the same would fall in 3307 and would attract 18% of the rate. Similarly, if they are coated with soap or detergent, then it will fall within 3401 and will attract 18%. So sum and substances in both the cases, the tariff heading would be different, 3307 and 3401, but the rate of tax is going to be the same. Next is, this was a issue which was represented by us before the council and the Honorable Revenue Secretary and the Finance Minister, and therefore the classification was issued. The clarification. The classification and applicable GST rate on real jari kasab, which is thread. Certain doubts have been raised regarding the classification and applicable GST rate on kasab thread, a metallized yarn, as yarn falling under heading 5605 attracts 12% GST, as per entry 137 of the Schedule 2 of notification number 1/2017 dated so and so, while specified embroidery product falling in 5809 and 5810 attracts 5% as per entry number 220 of Schedule 1. So therefore the clarification was required for classification. So one was 12% 5605 and the other one was 5% 5809 and 10. So the heading 5809 and 10 covered embroidery and zari articles. These headings do not cover yarn of any kind. Hence, while these headings apply to embroidered articles, embroidery in piece, in strips, or in motifs, they do not apply to yarn, including the kasab yarn. Further, all types of metallized yarn or threads are classifiable under the heading 5605. Kasab falls under this heading. Under heading 5605, real zari manufactured with silver wire, gimmed or on core yarn, namely pure silk and cotton, and finally gifted with gold would attract 5% GST. Under tariff 56050010, as specified in entry number 218A of Schedule 1, 5% of GST rate will be applicable. So they are saying that the jari which is manufactured with the silver wire on core yarn, which is namely pure silk and cotton, and finally which is gilded with gold would attract 5% under heading 56050010, as specified in entry number so and so. Other goods falling with this heading attract 12% GST. Accordingly, kasab yarn would attract 12% GST along with other metallized yarn, whether or not gimped, being textile yarn combined with metal in form of thread, strip or powder, or covered with metal including intimation zari thread. Therefore, it is clarified that intimation zari thread or yarn known as kasab or by any other name in trade parlance would attract a uniform rate of 12% in 5605. So they are clarifying that except the zari which is manufactured with silver wire limb, except this, in rest of the cases, wherever it is a situation of the yarn, metallized yarn, it will be falling within 12%. Applicability of GST on marine engine. Reference has been received seeking clarification regarding GST rates on marine engine. The fishing vessels are classifiable under heading 8902 and attracts GST at the rate of 5% as per serial number 247 of Schedule 1 of Notification 1 of 2017 dated so and so. Further, parts of goods of heading 8902 falling under any chapter also attracts rate of 5%. Y 252 of Schedule 1. The marine engine for fishing vessel planning falling under tariff heading 8408 1093 of the Customs Tariff Act would attract GST rate of 5% by virtue of 252 of notification number so and so. Therefore, it is clarified that the supply of marine engine for fishing vessel being a part of the fishing vessel falling under heading 84081093 attracts 5% GST. So, marine engine, the rate of GST would be 5%. Next, applicable GST rate on cotton quilts under tariff heading 9404. Scope of the term cotton quilt. So what is cotton quilt and what will be the rate that will be applicable is the question. Cotton quilts falling under heading 9404 attracts a GST rate of 5% if the sale value of such cotton quilt does not exceed 1000 rupees per piece. If it exceeds, however, such cotton quilts with sale value exceeding 1000 rupees per piece attract a GST rate of 12%. Now, doubts have been raised as to what constitutes common cotton quilt. Whether a quilt filled with cotton will cover with cover of cotton or filled with cotton but cover made of some other material or filled with material other than cotton. So what will be covered into this? That is the query. Kya confusion hai? Quilt which is filled with cotton with cover of cotton, number 1. Filled with cotton but cover made of some other material. 3. Filled with a material other than cotton. So what will be the rate which is applicable to any of these and each of these 3 products? The matter has been examined. The essential character of cotton quilt is imparted by filling material. Therefore, a quilt filled with cotton constitutes a cotton quilt, irrespective of material of the cover of the quilt. The GST rate would apply accordingly. Next is applicable GST rate for bus bodybuilding activity. Representations have been received seeking clarification on GST rates on the activity of bus bodybuilding. The doubts have arisen on account of the fact while GST applicable on job work services is 18% and supply of motor vehicle attracts 28%. So, bus building का अगर आप part बना रहे हैं या service दे रहे हैं तो what will be the rate applicable? For that, we'll also have to go into that whether it is going to be supply of goods or supply of service. So buses, motor vehicles for transport of 10 or more persons, including the driver, falls under the heading 8702 and attracts 20%. Further, chassis fitted with engines and whole bodies for buses also attract 28%. In this context, it is mentioned that services of bus bodybuilding on job work basis attract 18% GST on such service. Thus, fabrication of buses may involve the following 2 situations. 1. Bus body builder builds a bus working on the chassis owned by him and supplies the built up bus to the customer and charges the customer for the value of bus. B. Bus body builder builds body on chassis provided by the principal for bodybuilding and charges fabrication charges, which is including such materials that were consumed during the process of job work. In the above context, it is hereby clarified that in case mentioned in 12.2a, जहाँ पे जो bus bodybuilder था, he was owning the chassis also and that was supplied. So it said that supply made is that of bus and accordingly supply would attract 28%. In case of the example which is mentioned in para 12.2b above, fabrication of body on chassis provided by principal, the supply would merit classification as a service and GST rate will be 18% that will be applicable. Next is applicable GST rate on disc brake pad. Representations have been received seeking clarification on disc brake pad for automobiles. It is stated that divergent practices of classifying these products in 68 or heading 8708 are being followed. Chapter 68 attracts a GST rate of 18%, while heading 8708 attracts a GST rate of 28%. So therefore, there is always a confusion. Somebody is imposing 18 and somebody is 28. So part and accessories of motor vehicles of heading 8701 to 8705 are classified under heading 8708 and attracts 28% GST. Further, friction materials and articles thereof not mounted for brakes, for clutches, or the like, with a basis of asbestos, of other mineral substances, or of cellulose, whether or not combined with textiles or other mineral substances, or of cellulose, whether or not combined with textiles or other materials, are classifiable under heading 6813 and attracts 18% GST. So it is now obvious कि जहाँ पे भी 8708 में क्लासीफाई है, the rate is 28% and जहाँ पे 6813 में है, वहाँ पे 18% है. In the above context, it is mentioned that as per HSN explanatory notes, heading 8708 covers brake, shoe, segment, disc, etc. and parts thereof, plates, drums, cylinders, mounted linings, oil reservoirs for hydraulic brakes, etc., servo brakes, and part thereof. While Chapter 68 covers articles of stone, plaster, cement, asbestos, mica, or similar materials. Further, HSN explanatory notes to the heading 6813 specifically excludes friction material not containing mineral materials or cellulose fiber, mounted brake linings, which are classified as part of the machine or vehicles for which they are designed. Therefore, it is clear in view of the HSN explanatory notes that the said goods, namely disc brake pad for automobiles, are appropriately classifiable under heading 8708 of the Customs Tariff Act and would attract 28% rate. So now it is clarified that it is going to be attracting 28% rate. So this was the circular. Let me go back. So we have did 52 number. Now 53 of 2018, which is again 9th of August 2018. Clarification regarding applicability of GST on petroleum gases retained for manufacture of petrochemical and chemical products. So applicability GST on petroleum gases which are retained for the manufacture of petrochemical and the chemical products on which GST is otherwise payable. So this is on your screen. I'm reading from references have been received regarding applicability of GST on the petroleum gases which are retained for manufacture of petrochemical and chemical products during the course of continuous supply, such as methyl ethyl ketone, feedstock, and petroleum gases, etc. In this context, it may be recalled that clarifications on similar issues for specific products have been provided via circular number 12 of 2017 and 29 of 2018. These circulars apply mutatis mutandis to other cases involving same manner of supply is mentioned in these circulars. However, references have again been received for some of the manufacturers of other petrochemical and chemical products for issue of clarification on applicability of GST on petroleum gases, which are supplied by oil refineries to them on a continuous basis through dedicated pipelines, while a portion of the raw material is retained by these manufacturers and the remaining quantity is returned to the oil refinery. I think you all might be remembering कि इसके ऊपर हमने देखा था, whatever was being retained that was liable for GST. Now let us see how they are treating in this. In this regard, an issue has been arisen as to whether in this transaction GST would be level on the whole quantity of the principal raw material supplied by the oil refinery or on the net quantity retained by the manufacturers of petrochemical and chemical products. The GST Council, in its 28th meeting held on 21st of July 2018, discussed this issue and recommended for issuance of a general clarification for petroleum sector that in such transactions GST will be payable by the refinery on the value of net quantity of petroleum gases which are retained This was the same that we have discussed earlier also. Whatever is being retained for the manufacture of petrochemical and chemical products. Only the applicability would be limited to that extent. Accordingly, it is hereby clarified in the above cases, GST will be payable by refinery only on the net quantity of petroleum gases which are retained by the recipient manufacturer for the manufacture of petrochemical or chemical products. Though the refinery would be liable to pay GST on such returned quantity of petroleum gases when the same is supplied by it to any other person. It is reiterated that this clarification would be applicable mutatis mutandis on other cases involving supply of goods where feedstock is retained by the recipient and remaining residual material is returned back to the supplier. The net billing is done on the amount retained by the recipient. So it is similar to what we have discussed in the earlier circulars. Moving to the next circular. It is 54 of 2018, which is 9th August 2018. Classification of fertilizers supplied for use in manufacture of other fertilizers at 5% GST rate. So just let me share. So 9th August 2018, references have been received regarding a classification as to whether simple fertilizers such as MOP, muriate of potash, classified under Chapter 31 and supplied for use in manufacturing of complex fertilizer are entitled to a concessional rate of 5% GST as applicable in general fertilizers. The matter has been examined. Chapter 31 of the Customs Tariff Act covers fertilizer. The fertilizers are mostly used for increasing soil and land fertility, either directly or by use in manufacturing of complex fertilizers. However, certain fertilizers and similar goods falling under this chapter may be used for individual purposes like use of molten urea for manufacture of melamine and urea used in manufacturing of urea formaldehyde resins or organic synthesis. So mainly the query is that when it is utilized, when the fertilizers are being utilized for manufacturing of complex fertilizers, whether the same rate will be applicable or not. In pre-GST regime, the concessional duty rate was prescribed for fertilizers falling under Chapter 31 of the tariff. This concessional rate was applied to goods falling under Chapter 31, which are clearly to be used directly as fertilizers or in the manufacture of other fertilizers, whether directly or through the stage of an intermediate product. Now, in the GST regime, tax structure on fertilizers have been prescribed on the lines of pre-GST tax incidence. The wording of the GST notification is similar to the central excise notification, except certain changes to meet the requirements of GST. These changes were necessitated as GST is applicable on supply of goods while central excise duty was applicable on manufacture of goods. Accordingly, fertilizers falling under heading 3102, 3103, 3104 and 3105, other than those which are clearly not to be used as fertilizers, attract 5% GST. However, the fertilizers items falling under the above mentioned headings, which are clearly not to be used as fertilizers, attract 18% GST. The intention has been to provide concessional rate of GST to the fertilizers which are used directly as fertilizers or which are used in manufacturing of complex fertilizers, which are further used as soil or crop fertilizers. So intention is important. If the intention is to be used as fertilizers or to be used as a component which can be used for further manufacture of a complex fertilizer, which is finally used for the soil or crop fertilizers, then intention is getting served. The phrase other than clearly to be used as fertilizers would not cover such fertilizers that are used for making commercial complex fertilizers for use as soil or crop fertilizers. Thus, it is clarified that the fertilizers supplied for direct use as fertilizers or supplied for use in manufacturing of other complex fertilizers for agricultural use will attract 5% of GST. So the GST rate in that case will be 5%. Let's go back. The next circular is circular number 55. Taxability of services provided by ITI, Industrial Training Institutes. what will be the taxability, whether the GST is applicable on them or not. This is what is being clarified. 55 of 2018, 10th of August 2018. Representations have been received requesting to clarify the following. A. Whether GST is payable on vocational training provided by private ITIs is in designated trades or in other than designated trades. B. Whether GST is payable on the service provided by a private industrial training institute for conduct of examination against consideration in the form of entrance fees, and also on the services relating to admission or conduct of the examination. So there are two queries which are raised. One, कि क्या GST लगेगा on vocational training which is provided by ITIs, या तो in designated trades और other than designated trades, उसके ऊपर GST की applicability. Two, जो services provide कर रहे हैं private ITIs for the conduct of the examination against consideration in the form of entrance fees, and also the services which are relating to admission to or conduct of the examination, whether that will be taxable or not. With regard to the first issue, it is clarified that private ITIs qualify as an educational institution as defined in para 2 clause Y of notification 12/2017 if the education provided by these ITIs is approved by as vocational educational course. The approved vocational education course has been defined in para 2 clause H of the notification IBIT to mean a course run by an ITI or an industrial training center affiliated to NCVT, which is National Council for Vocational Training, or SCVT, which is a State Council for Vocational Training, offering courses in designated trade notified under the Apprenticeship Act 1961 or a modular employable skill course approved by NCVT, run by a person registered with DG training in Ministry of Skill Development. Therefore, services provided by a private ITI in respect of designated trades notified under the Apprenticeship Act 1961 are exempt from GST under serial number 66. As corollary, services provided by private ITI in respect of other than designated trades would be liable to pay GST and are not exempt. So therefore, it is now clear. If it is designated trade, then exempt. If not, then it is taxable. And with regards to the second issue, it is clarified that in case of designated trades, services provided by private ITI by way of conduct of entrance examination against consideration in form of examination entrance fees will also be exempt from GST. Further, in respect of such designated trades, services provided to educational institution by way of services relating to admission to or conduct of by private ITI will also be exempt. But it is further clarified in case of other than designated trades, in private ITI, GST shall be payable on the service of conduct of examination against consideration in the form of entrance fees, and also on the services relating to admission to or conduct of examination by such institutions, as these services are not covered by the examinations IPT, exemption IPT. As far as government ITIs are concerned, services provided by government ITI to individual trainee students is exempt under serial number 6 of 12/2017, as these are in the nature of services provided by the central government or state government or to individuals. Such exemption is related to services provided by government ITI, would cover both vocational training and examinations conducted by the government ITI. So therefore, private and government, if it is pertaining to the training of the designated trade, it is exempt. In case of government, everything is exempt. But if it is concerned with the trades which are not designated, then in that case, it is taxable. Both are taxable. The basic services which are being provided, that is also taxable, as well as the service of admission or service of conduct of examination, both are taxable. In case of where the services are provided to a designated trade. So now next is 62 of 2018, 12th September 2018, levy of GST on priority sector lending certificate. This has already been dealt with. There are some changes which we'll be covering in this circular. Yes, it's there on your screen now. Representations have been received requesting to clarify the following. Mechanism for discharge of tax liability on trading of priority sector lending certificate for period 1st July 2017 till 27th of May 2018, and GST rate applicable on trading of priority sector lending certificates. The representations have been examined. With the approval of the GST Implementation Committee of the GST Council, it is clarified that GST on PSLCs for the period 1st July 2017 till 27th May 2018 will be paid by seller bank on forward charge basis, and GST rate of 12% will be applicable on the supply. So this is they are clarified कि वो forward charge में pay होगा और जो rate है that will be 12%. Now moving to the next circular. 66 of 2018, 26th of September 2018. GST on residential programs or camps meant for advancement of religion, spirituality, or yoga by religious or charitable trusts. So it is 66 of 2018. Just allow me to share the screen. Certain representations have been received seeking clarification as regards to applicability of GST on residential program or camps meant for advancement of religion, spirituality, or yoga, where the fees is charged includes the cost of boarding and lodging. The issue has been clarified in Chapter 39, GST on charitable and religious trust of compilation 51 GST flyers as on 1st January 2018 available on the link. So there is a link which is given and they are saying that they have clarified this particular issue. Now the link is not working for the time being. So we will not be able to access that. No worries. I'll try to locate it and share it in the next session. Maybe we'll try to do something tomorrow. Now the relevant portion which is read as under, so they have reproduced also. The services provided by entity registered under 12AA of the Income Tax Act by way of advancement of religion, spirituality, or yoga are exempt. Fees or consideration charged in any form from the participants for participating in a religious yoga or meditation program or camp meant for advancement of religion, spirituality, or yoga shall be exempt. Residential programs or camps where fees charged includes cost of lodging and boarding shall also be exempt as well as the primary and predominant activity, objective and purpose of such residential programs or camps is advancement of religion, spirituality, or yoga. However, if charitable or religious trust merely or primarily provide accommodation or service, serve food and drinks against consideration in any other form, including donation, such activities will be taxable. So therefore, if the primary act is the advancement of religion or the yoga, then in that case, the provision of the boarding or lodging facilities will be exempt, otherwise taxable. Similarly, other activities such as holding of fitness camps or classes such as those in aerobics, dance, music, etc. will be taxable. It is accordingly clarified that taxability of the services of religious and charitable trust by way of residential programs or camps meant for advancement of religion, spirituality or yoga may be decided accordingly. So therefore, आपको देखना पड़ेगा कि what is the purpose with which it is being done, and if it is primarily the purpose is advancement of religion or yoga or likewise, then in that case the exemption is there, otherwise it will not be exempt. Now next is 80 by 2018. I think we should stop here because a lot of, I think 4 or 5 circulars we have read, and once again I've requested this earlier also, once again I'm requesting. See, the intention of this series is to read each and every line. At times I have to be fast. At times I'm not in a position to discuss at length with examples. But the intention is that when we read together, we get something. And at times, when we read once, we get the clarity of what the query was and what the solution is. In case there is some confusions, then I would request that we must read these circulars once again after this session or maybe anytime at your convenience, so that if any queries are there, you can note down those queries. And we'll certainly have someday a query session wherein we'll be discussing the queries, or you can post those queries to me in advance and we can have a discussion on that, or I can record back on one-to-one basis. That also can be done. So now for the time being, we'll be stopping here. Tomorrow we'll be starting with circular number 80 of 2018. And once again, I'm thankful to each one of you for being with me and learning together. Thank you. Thank you very much.